July CPI numbers are in. Have we reached peak inflation? Is a recession just around the corner? Do investors have nothing to worry about? And is it time to FOMO in? We're going to look at those topics and more. Let's go. Okay, I just want to start with the ridiculousness of the president coming out today and saying that inflation was 0%. It's actually, that is a blatant lie. It's almost, if not worse, as the redefining of the term recession, which, granted, they did some fudgery there. But today, I can't believe it. Look at this guy's lies. And like I said, I'm not a Republican or a Democrat, but just watch this.
Actually, I just want to say a number. 0. Today, we received news that our economy had 0% inflation.
It's like
in the
laughable.
month of July. 0%. Actually, I just want to say.
Okay, so that was the double speak coming from our fearless leader today. I can't believe that he has the audacity to come out and say that, and it kind of leads me to believe that there is some fudgery going on, like around the jobs number last week, and then today with the CPI number. If you've been to the store lately, you know that inflation indeed is not 0. So I want to show you what he's looking at because all the other numbers were pretty intense. So, like, when he's talking about inflation being 0, what they're saying is that the increase in inflation. Hate to break it to him, but inflation is still at 8.5 in July. So look at this takeaway from the July inflation report. I don't know where. So he's saying 0 because he means it stopped. The rate of acceleration has stopped. But year over year, it's still 8.5, and this is from the. Let's see the source. This is the Bureau of Labor Statistics. So it's the year over percentage. Headline inflation is still 5.9 itself. So headline inflation excludes food and energy. They say that counting food and energy and in the inflation report, what the feds quote unquote look at is 5.9. So that's still well above 0. This 8.5 includes things like shelter, used cars, airplane tickets, basically anything other than food and energy that you'd spend your bill on. So for him to come out and say 0 is misleading, to say the least. And so you got to obviously, especially in this midterm years, a few months leading up to the midterms, the current administration is going to do whatever they can to make a picture look rosier than it actually is. And so the actual inflation year over year for core inflation, for headline inflation is 8.5%. So by historical means, that is still a dramatic, effect on our standard of living as Americans. Let's look at what food prices, how they have risen. Egg prices, if you've been to the grocery store, you know this is the case. Egg prices have risen 47%. So, yeah, the high hasn't seen since 1979. So, let's look at this here. The consumer price index rose lower than expected, and this is such a nefarious way for them to fudge the numbers as well. The actual what they do and what major corporations I've noticed as I've been paying attention all this earnings season is that when they know bad news is coming, they'll say it's going to be really bad, and then when it's not as bad as they say, the market takes it as a win, which is, to be honest, a very clever strategy on the behalf of corporations. I've seen do that this cycle, as well as the government. So food at home category in this inflation report that was released today soared to 13%. You're spending 13% more this year on average at the grocery store. That's the largest increase since 1979. So that's in itself is going to hit the pocketbooks of consumers. And what's funny to me is that they keep saying we have a strong consumer because of the stimulus checks, the household balance sheets, the savings rates are still really high historically. But that is, for one, and we have reports of Bank of America CEO coming out last week saying that's because we are hitting our credit cards and our savings. We're draining our savings. We're racking up more debt, and we may not see the hit to consumer confidence yet. We'll know on Friday. I believe the numbers from Michigan get released on Friday for consumer sentiment. But humans are going deeper in debt, and that debt crisis will come to haunt us probably in the second half of next year. I'm guessing around April is when things will really start to hit the fan. So looking back at the increase in food prices, Biden has the audacity to say inflation is at 0% when food prices are up 14% over the year since last July. So that's, to say the least, that is misleading for him to say that. Let's look at some other key numbers. We have food prices accelerated, like we just went over. Rent prices continue to climb quickly. That's another thing that propped up the core inflation. I know my own rent has been increased, not too much, just 5%, and it wasn't raised last year, so that's 2.5 annualized. So for myself, I know it's coming to effect for me, but not too bad. I'm in Northern California, where rents are already high. Okay, so airline tickets, we have. So airfares did go down because the price of oil is going down. So that is some relief for the consumers and for business travelers. So where he's saying this is on a monthly basis, the price index did not move at all in July. So take it for what it's worth. I think that is very misleading. Now, the big question is, what does this mean for the Fed? Can the Fed stop raising interest rates? Will they take their foot off the gas pedal? And is it time for the retail investor to FOMO in? So this is not financial advice. Honestly, never take financial advice from me. I'm not great with money, but I am good with news. And so I like to just pay attention to this kind of stuff. So not financial advice, but we did have two Fed regional presidents come out today, Evans and Kashkari, and they are what I believe are more dovish. So they were two of the Fed presidents that were supposed to be less aggressive with the rate hikes. They came out shortly after the numbers were released today, and I'm following along. And Twitter has a great, usually cuts and pastes. You can find snippets of what they're saying. So Kashkari came out and said, happier to see inflation surprise to the downside, but, and this is key takeaway, this doesn't change the rate hike path, expecting 3.9% by the end of the year and 4% the end of next year. So I already saw that the market's priced in a downgrade from a 75% point hike in September to a 50%. And you can see that in the pop in the NASDAQ today. It's currently up, let's see, the NASDAQ is up 1.9% today. Or sorry, the SPY is. And the NASDAQ is up 2.75, 74, give or take. So the markets are up. NASDAQ up a little bit more. And the dollar has weakened. So that's going to push some risk assets a little higher. So the market saw the numbers and thought, wham bam, time to go all in. But personally, I feel that they are putting the cart before the horse. You have the feds come out and say, whoa, this doesn't change our trajectory. And frankly, I think it is a hilarious misstep in miscalculation on behalf of the markets and retail investors. anecdotally, people I know saying the market's in, let's get in. Not the case. This is just an extension of the bear market rally. There's going to be a rude awakening for market participants when they realize later half of this year, come 2000. My timing might be off, but I'm thinking maybe it's going to be November now, when October maybe, when they realize, and maybe Bretton Woods, that the big Fed meeting, that the Feds are not going to take action to take their foot off the pedal with raising rates. So here's Kashkari again saying the idea of a rate cut early next year is not realistic. And let's see, Evans right here. I don't think the equity markets tell us anything about inflation. So the jobs are still tight. I know core inflation is still prevalent despite what the president says. And even the dovish Fed members are coming out and saying we are not going to cut rates, we're not going to take our foot off the pedal with raising rates. We are not going to pivot. So take it for what it's worth. All the Fed presidents are coming out and saying, whoa, we're not going to stop. So here you go. Inflation is widespread. One of our contact mentioned whopping membership. Okay, so we do not have relief coming from a Fed pivot or a Fed put. Do not FOMO in yet. Or if I personally am going to still raise cash, and so that I could be at a better spot to take advantage of the real drop that we haven't even seen yet, which I know is coming. So call me Perma Bear all you want. I know it's coming. All of this cannot last forever. It's the Big Short, part Deuce, and we're just gonna have to wait for this to play out a little bit longer. Market participants are still making the incorrect assumption that Feds are going to pivot, and if they do, that's just going to hurt the Fed's credibility even more. So it's not going to happen. All right, that's it for today. Core inflation at least stops raising. Headline inflation as well. Biden comes out and puts lipstick on a pig, says prices aren't going up. We know that that's not the case. Food is going insane. And just remember, as we enter this stagflationary period, the most important thing is to build personal capital. Invest in yourself every day. Take care.